Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, and this time we're going to cover the weekly time frame in combination with the channels as well, the base channel and the trend channel. Now first, the two weekly scenarios that have a higher probability. The first one here is a very simple impulse to the upside, 1, 2, 3, 4 and the wave 5. Common target for your wave 4 is the 236 to the 05 Fibonacci, taken from the low of 2 to the high of wave 3, giving you a target area between 57.1k and 42.8k, with the invalidation being 37.7k. Preferably, this wave 4 of a higher degree retraces to the price action of a wave 4 of a lower degree, which is the green wave 4, because the higher degree count is the yellow 1, 2, 3, 4, 5, and inside this wave 3 we then have the green count 1, 2, 3, 4, 5. It is a guideline in Elliott waves that a wave 4 likes to retrace to the price action of a wave 4 of a lower degree. It's not a rule, but it is very common, and what you can see here is that so far we have not gotten close to this price action over here between 49.1k and 38.5k. After wave 4, which preferably is a bit lower, we then look for a wave 5 towards the upside, where an estimation of a target is about 79.6k to 140k if price would retrace to the 382 at 48.7k. The more bullish scenario is a double 1, 2. Here, your higher degree count, once again, is the yellow count, 1, 2, 3, 4, 5, with inside wave 3 an unfinished green count, 1, 2, still looking for a wave 3, 4, 5, meaning in this scenario, after this double 1, 2, we want to see an insane high volume impulsive move towards the upside. Now, I just spoke about the fact that if we count a 1, 2, 3, 4, 5, preferably wave 4 hits this white box over here. So the fact that at the moment we haven't does increase a little bit of probabilities for a double 1, 2. You can also see that price action in both of the cases is quite sideways. Now there's a rule of alternation which says that if wave 2 is sideways, wave 4 tends to be sharp. At the moment, this correction here, if we want to label it a wave 4, is not really a very sharp, quick, scary corrective structure. It's also quite sideways, but we do have alternation in structure. Flat in 2, zigzag structure in the green wave 2. It also has to be said that if wave 2 by itself is a sideways structure, a wave 4 potentially in a 1, 2, 3, 4, 5 has 78% of being sideways as well. So we can't really give high probabilities to a double 1, 2 just because of the structure, which in both cases is quite sideways. But the wave 4 retracement to a lower degree is very helpful, and also the channels that I will show you now. What you see on the chart here is the base channel on the logarithmic chart, taken from the low to the low here to the first time touching 30k. If we are looking for an impulse to the upside, we want to break out of this channel, which as you can see, we did over here. And now we are retracing back towards the base channel. Now, if you look at an impulse in combination with the base channel, what you want to see is then a 1, 2, 3, wave 4 retracing to the base channel and one more move towards the upside in a wave 5. So one would say, hey, we moved out of the base channel, we retraced inside the base channel, and now we're looking for one more move up. This supports the impulsive scenario 1, 2, 3, 4, 5 on my chart here. And you're not wrong. However, what we do like to see is the trend channel broken. So this channel is taken from the high of your wave 1 to the high of your wave 3 to the low of your wave 2. And if we want to increase the probabilities for this range here to be a wave 4, we preferably see this lower trend line broken, meaning we want to see a longer sideways corrective structure in this wave 4, which is also common, because most common for a wave 4 is that it is longer in time than your wave 2. So if you take a fib time from the start to the end of 2 to the end of wave 3, then preferably your wave 4 is ending after the 1-to-1, which is the 12th of August. But at the moment, we made a low here before the 1-to-1. We also did not reach the wave 4 of a lower degree, and we have not broken the trend channel, which is preferred when we look for a wave 4. If price would move towards the upside and then continue ranging here to the downside, right, a significant break of the channel, that is when the probabilities really start to increase that we're looking for a wave 4, especially if we also retrace in the wave 4 target area of a lower degree. But at the moment, based on the channels, the bullish scenario being a double 1-2 would have a higher probability because of the respect we have with this channel. We don't have a breakout. All the price action here in the trend channel is contained inside this channel. And also with regards to the base channel, we do have a move to the outside, but if we are really looking for wave 3s, of course, preferably we see a bit of a bigger structure. Now, in the past, I have also shown this scenario here. Now, this is a 1, 2, 3, 4, a 5-wave impulsive structure, and inside this wave 3, we then look for 1, 2, 3, 4, 5. Now, if we use the channels once again, then you will see that by now this scenario doesn't have great probabilities compared to the other two. And that mainly has to do with the green count on the chart here. So if we go to the daily time frame and pull some channels on the chart for the green count, then we can start with the base channel for green. Now then we pull a channel from the low of your wave 1 in green to the low of your wave 2 to, let's say, this high here, right? If this is the start of your wave 1 there, right? And you can see that yes, we moved outside of the base channel. That's what we like to see in a wave 3. But we moved through the base channel to the other side. And that is something you do not want to see for your wave 4. You don't really want to see this lower trend line hit most of the time. A common target with regards to a wave 4 and the base channel would be getting close to the upper trend line, maybe the middle over here, but moving to the downside and even breaking the lower downside trend line here is not something you want to see in a wave 4. So this reduces the probabilities for this scenario. And if we take a channel from the end of your wave 1 then to the end of your wave 3 to the high of your wave 4, then yeah, you can see we did significantly break. Let me put this on trend channel as well, by the way. So we significantly broke the trend channel over here, right? This is what you do want to see for a wave 4, but this is why it's so interesting to combine the different channels, both this one, the trend channel, the yellow one, and the green one I've just shown, to reduce the probabilities for this particular scenario. So in other words, on the weekly time frame, the other scenarios that I have shown earlier work better with, of course, here the impulse to the upside, where preferably we see a continuation of the range, and the double 1-2. Now if we go to the daily time frame, then we had the ABC towards the downside, a 3-wave structure. Also here again, you can use channels, very effective with Elliott waves. You take it from the high over here to one of these pivots, doesn't really matter, because in the end you can see that the price action has been contained inside the channel, and that is what you want to see as well, right? This increases the probabilities that this structure here is corrective, not impulsive, because for an impulse we wanted to break this channel towards the downside, right, which we haven't done. Now this, of course, this scenario here supports the more bullish scenario for potential double 1-2, where if this is then the end of your wave 2 on top of the trend channel as well on the logarithmic chart. So you can see perfect support over here on that trend channel on the weekly time frame. We are then looking for a wave 1 to finish, a 3-wave 2, and then continuation to the upside in a wave 3. The common target at the moment for your wave 2 with the high that we have is between 61k and 56.7k, taken from the low to the current high, but this wave 1 can definitely still move up, and on the 4-hour time frame we're at the moment still looking for that as well, with a 1 2 1 2 3 4 5 4 5 moving towards that 70k area before then a rejection to the downside. So this scenario would be very interesting for the double 1-2, while at the same time the bearish scenario is an extension of this range. And in this scenario, we are looking for a W or A, B or X, and a Y or C. But what's then going to happen is that on the weekly time frame with the trend channel, you're going to move out of the trend channel, right? Significantly. It's no problem if with the bullish scenario you have a 1, 2, shortly move out and continue, right? But here you're going to move significantly out of the trend channel, which is going to support the scenario where you only move up for a wave 5 and then you're finished on the weekly time frame, right? So what you're looking for here is a wave B or a wave X, which most commonly are zigzag structures, which is a 5-3-5 structure, looking for a 5-wave move to the upside here, an impulse, and then a wave A, look for a wave B, and then another wave C towards the upside. Target area for X and B are on the chart here. X is 71.566K and B is 81.5 to 78.6K. And because of the height of this move so far, you look for an A, B, C. A flat would have a higher probability, really. But yeah, nonetheless, you're looking for a continuation of this range sideways, and this would then significantly increase the probabilities for the arguably more bearish bullish scenario on the weekly time frame, which is this scenario here, where we do want to see a longer sideways range in your wave 4. So if we then finally look at the probabilities, then at the moment, based on the channels and the different scenarios here, the probabilities would be a bit higher for a double 1-2 compared to the impulse 1, 2, 3, 4, 5 and bull market and then move towards the downside. But in both of these cases, and that is what's going to be so important and what's so interesting with Elliott waves, in both of the cases, the probabilities are higher for price to take out the all-time high. The probabilities are higher that this is a corrective structure. And the moment price takes out the all-time high, right, that is when we have to observe what price does in new discovery, right? So all depends on the next range that's then going to form. And that's the general tip, that if you do break out over here towards the upside, we gotta wait for a range to form. And in the more bearish bullish scenario, you want to see a big range form here, big weakness, rejection, and then you're going to have a new bear market. While in the more bullish scenario, you're looking for an increased a move towards the upside, increase in volume as well, and you don't want to see very big sideways horizontal ranges in this scenario after 1-2-1-2. You want to see a big move to the upside. So both cases, you're looking for upside, and on the daily time frame, also here, we are still looking for an impulse to the upside on the daily to finish. So a 5-wave structure, 1, 2, 1, 2, 3, 4, 5, 4, 5 is one of the scenarios we keep an eye on here. Then look for a rejection and at least one more move towards the upside, both in the bearish and the bullish scenario. In the bullish scenario, this is called a wave 1, 2, and you look for 3. And in the bearish scenario, we would then be looking for a wave A, a wave B, and a wave C. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.